good morning or slash good afternoon. Thank you everyone who's joining us today for our monthly IT market update. I'm James Chaplin. I'm the CEO and founder of Vacancy Soft, and I'm here with Matt Gallivan from Job Adder, head of sales. And what we're going to be doing on this presentation today is we're going to be running through what we've been seeing in the IT job market and what the key changes are, most noteworthy, just to give you a better sense of what's happening overall. So without further ado, I'm just going to run through this. Put this on. Sorry guys, there we go, single page. There we go. So we're going to go through. So about us, if you don't know who we are data publishers. We monitor company websites for change. We identify from the websites new jobs being published. We assign up to 20 data points per vacancy, and that then means that we can provide really, really high grade data analytics, which is what the base of this report is on. We work with lots of lovely clients. Thank you all our clients we work with. We love you all very much. And we're also regularly featured in the media. Now, and in terms of Matt, do you just want to quickly introduce yourself? Because I'm sure most people know who Job Adder are, but maybe some of the people don't.
Yeah, so my name is Matt Gallivan. I head up sales at Job Adder for EMEA and North America. And we are a CRM specifically for the recruitment industry, headquartered out of Australia, but with a very firm presence in the UK as well. And we use a lot of data and analytics to also inform the market about what's going on. And so thanks for having me on today, James. You know I'm geeky and I love to talk through the data. So looking forward.
Yeah, lovely, Matt, and it's a pleasure to have you on this call as well. And look, in terms of what we're going to be running through today, just to give you guys a quick overview, we're going to be looking at the overall macroeconomic data. Obviously, recruitment is tidal. Everyone remembers how great 21-22 was. Well, guess what? That wasn't just because you were a great recruiter. It was because the market was amazing and everyone made money. So we're going to have a look at what the macro data is saying about what's going on now and how that might impact you. We're going to do some headline benchmarking. We're going to look at the direction of funding. We're also going to look at corporate recruiter vacancies. Quite a good weather vane corporate recruiter vacancies, because obviously when companies are looking to expand teams aggressively, they grow their internal talent teams. When they're slowing down, those vacancies slow down. We're going to do some regional analysis, look at sales and demand, identify which sectors we think are performing the best. And we're going to look at the tech companies to watch, what's happening there. And we're going to end with a gaming focus. Anyway, so continuing, macroeconomic data. So people who don't know me, I'm actually an economics graduate from Manchester. And, so this is all may look quite confusing, but I want to just try and talk you through and walk you through what all this data means. So if we're looking at what's happening here, what we can see is that the most noticeable headline is the slowdown in GDP growth in the UK. Now, the OECD have come out last week, and they forecast that the growth next year is going to be higher and it's going to be quite a significant uplift. Nonetheless, it's worth reflecting that their guidance is that's predominantly because of the planned investments into the public sector. And so what you will see is that a very narrow growth around, everything to do with what British Energy is going to be doing, everything around housing, construction, engineering. It's unclear in other areas, because at the same time, if you look at what's happened in the last week, you've seen the Institute of Directors report on all-time lows on confidence. You have to go back, I think, 30 years before the last time the confidence was so low. It was really quite dire, excluding the pandemic period. Whereas in the meantime, what we're seeing is that the USA is actually growing really, really very fast. And this is a point of concern. I'm going to catch breath for a moment. But this is a point of concern because actually when we're looking at where we're at as the UK in terms of the UK economy, the thing which everyone needs to understand is that if the UK annualized growth is under 2.5%, then what that means is that our current national debt will continue to increase. And so and that's just going to mean taxes going up, or that's going to mean interest rates going up. So looking at the GDP growth is really quite important to understand what's going to be happening in terms of tax, what's going to be happening in terms of borrowing. Looking through some of the other numbers, going on to unemployment, inflation. Now here, unemployment in the UK, now we're very sneaky in the UK. The UK government uses a completely different labour market monitoring method to any other country in the world, designed to make unemployment look lower, which of course, that's what happened under the Conservatives, not to say anything else. But the key point is that unemployment is especially high in the NEET category, which is not an employment education training. And the Labour Party said this is going to be a big area of focus for them. Interest rates is obviously a big discussion point at the moment, but the latest guidance that has come out suggests that the impact of the latest budget means that the interest rates are going to come down slower than they otherwise would have done. The mid-range forecast is for interest rates to end up being between 3.5 and 4%, but it's unclear on the timescales that that's going to happen. Finally, just to very quickly look at Forex. I think Forex is quite useful to understand because, if a country's currency is getting stronger, then that generally is an indicator of better economic performance. If it's getting weaker, then it's a negative. So what we can see is that in the last month, the pound has weakened against the dollar, and that's very much to do with the certainty post-US election. And meanwhile, it has strengthened against the euro, and you can point straight to the volatility in France there. So that's the very quick headline analysis. A bit of a mixed picture, but and the fact that interest rates are forecast to come down more is a positive. The big question, obviously, for the government is how do they get the same levels of growth in the private sector, which are non-reliant on the state, as the private sector, which is benefiting from the state investment that's going on. Matt, I'm going to just throw this to you. Is there anything you want to say before we move on? So that was quite a technical brief I just gave.
No, just that one of the things here is that whilst we can look at the macroeconomic trends that are going on, what we see in conjunction with that is that recruitment agencies, from what we're hearing, we speak to agencies all day, every day, is they're actually planning for growth next year. But that growth doesn't necessarily mean people and getting more people in it. It's using technology and actually doubling down into the accounts they already have and making more out of those. But it's one of the things, as you say, James, it's very cyclical. We've had a time of boom. We're now in that time of, I wouldn't use the word austerity, but it's been a very tough market.
Flat. It's flat, right? That's what I describe it as, just flat.
Yeah, flat. But what we're seeing actually is, and I'm going to upset a few people here, is that we saw loads of people come out of lockdown and have these boom years where actually phones ringing off the hook for both candidates and placements. But what we're seeing is that actually this is really sorting the wheat from the chaff when it comes to recruiters, and those who've got those tried and tested methods are doing really, really well, and those who don't and who are maybe new to this market. And this is actually, I think, we're having a bit of a return to normal in this space. But two things to call out that you mentioned there was, you're right, the UK does have a very weird and wonderful way of reporting its unemployment figures that make us look like we've got this record low unemployment, which clearly isn't the case. But what I'm noticing at the moment on this stepping away from recruitment is we're seeing people who are really leaning into this gig economy climate, where actually they're having a number of jobs. They're not getting onto the property ladder as soon. If we don't see a reduction in interest rates, in mortgage rates, in all these things, we're compounding that problem. And that then does become cyclical. We've got more UK debt, less homeowners. There's less of that extra money to be spending on goods and services. So it's really quite a precarious time as we move forward. I'm interested to see where it goes and how it affects the job market, but we'll be going into that, no doubt. But yeah, it's just an interesting time, really, with the especially with the data available and what you can pull from it.
I'm going to move to the next slide. And look, this is just very quick benchmarking, and I'm not trying to depress anybody. I'm just going to show you guys what's going on. So this is just to explain what this chart is. I've skipped 21 and 2022 because we kind of need to delete those 2 years from everything that we do and everything we think about. These were lovely years, but they're not years that we can benchmark against because, as we know, they were just crazy. So we've taken 2029, which was the last working year pre-pandemic, looked at last year, and then we looked at this year. And what we're looking at specifically is how is this year performing against last year and also 2019. Now, the bad news is that this year is down on last year and it's also down on 2019, which is a reflection of, as we're saying, the market's flat, it's tight. And I mean, I don't know, Matt, in terms of your IT clients, I mean, have you got any thoughts about this?
Yeah, what we're actually seeing is most of them are telling us that they are doubling down into business development at the moment, and how
Hmm.
they can secure um, more clients, but also more from the clients they have. And so they're looking at investing in technology. They're looking in strengthening those client relationships. And another one is they're actually trying to build in resilience.
Hmm.
So there isn't this kind of knee-jerk reaction to the market. But this is exactly what we're seeing as well: is a, a general trend down.
Hmm.
The other interesting thing that we're seeing is that those in the technology space, particularly, are actually less concerned around candidate acquisition and making more out of the candidates they've got. So not just the clients they've got, but how can they search their database? How can they not have to pay for new candidates, but repurposing candidates that are already going through their system? Um,
Hmm.
the other thing that we're kind of seeing that follows these trends as well, excuse me, is exactly what you said, James. Is that if we take out those two um, kind of non-benchmarkable years, for want of a better phrase, we are we are seeing that actually the market overall is not having this swing of a change. We're not suddenly going, right, we need to diversify. They're sticking in lanes. We're not finding IT recruiters like some others are diversifying into other areas. They
Hmm.
are focusing on their own areas, but same within IT, software, whatever that may be, but expanding within that space. So
Hmm.
if you are supplying software developers, maybe you're also looking at network engineers now, rather than a
Hmm.
complete into other industries, which we see with a lot of other divisions of recruitment agencies.
Yeah, and I think the other thing, and before we move to the next slide, and I agree with everything you said, Matt, is that what's also quite interesting for me is that the only month this year when the IT job flow was significantly higher than last year was straight after the election.
Yeah,
You know,
and
pretty much every single other month. It's been, I mean, there's maybe in May there was a little bit of an uptick, but if you look at it, it's like September marginal increase, but mostly, it's been lower than last year. Last
and
word, Matt. Before we go to the next slide.
we've just seen a lot of to go along with this. When you mentioned there the election, we've seen a lot of political uncertainty this year with change of government, new budgets being released, and I think that gives everyone kind of that pause to let's see how things are going to pan out. Um,
Mhm.
but also, once that decision is made, they know what they're working with moving forward, and so they'll actually plan accordingly. Um,
Mhm.
and so, I think what we've seen is that before that, we've seen people, let's not just wait and see, but let's hold off on maybe some big plans or big changes.
Yeah, yeah, yeah.
But I'm hoping that that will
Absolutely.
now settle down and people will would maybe have revisited plans about what they're doing, and we'll start to see that change as we go into next year.
Yeah. Okay, I'm going to go to the next slide. Thanks, Matt. This is a repeated slide, but that's because we don't have the Q4 data. This is, look, so much of IT is in the scale up space. And and obviously companies which are either startups or scale ups, a lot of their hiring is contingent on the amount of funding they get. And so when we saw, for example, record levels of funding in the UK, we also saw record numbers of jobs in IT startups and scale ups. Um, and unfortunately, what we're seeing is that Q3 has been a very, very quiet period in terms of funding, both in terms of the numbers of deals happening and in terms of the total amount of funding. Yeah, so we'll wait and see what the Q4 numbers look like, but it's unclear what's going to happen there. For reference, guys, this isn't our data. This is PitchBook's data. I should have had a little PitchBook sign there. This is PitchBook's data. So, and we've taken it from them, from a report they published. But I'm very interested to see how Q4 ends. But as I said, the key headline is that if your primary client market is in the scale up and in the startup space, the fact that funding is down is going to mean that your clients are going to be slowing down themselves. Oh, Matt, does that make sense? I mean, what do you think?
Yeah, completely makes sense, and totally ties in with what I'm hearing, not just in our space, but also in the general funding. I've worked with a number of VCs in the past, and they're seeing the same thing, which is uh, there's less tolerance for risk, and so they are maybe being much more diligent about how they're investing. I mean, I'm going to go out on a limb and say I think that we'll see either a slight trend down or a plateau of what we're looking at now for Q4. Uh,
Mm.
what I'm hoping is and obviously what we need is we need these VCs to invest for more jobs and just a general economic ecosystem.
Mm.
But I think we're going to see a plateau in this in Q4, and that's just what I'm hearing from the various VCs that I've worked with over the years.
Fair enough. Okay. Move on. I mentioned before the weather vane. Well, yeah. Look, we haven't finished Q4 yet. I know, but as things stand, we are forecasting the Q4 internal recruitment vacancies to be the lowest over the recorded 3-year period. Sorry. No good news here. This is quite literally being told it's going to rain tomorrow and don't go outside. And Matt, what happened to your garden furniture?
Yeah, we were stuck in the storm, and I've lost a few tiles of some garden furniture. And I think you're right; the weather forecast is pretty much the same. We've had some storms predicted, and I think what we're seeing here is this general trend down. Interestingly, for me, in this kind of corporate recruitment space, internal recruiters, is I think there's been a lot of rationalization, and technology is helping with that in terms of automation and a bit of AI and what's going on there. But automation, I think, is helping a lot of what these recruiters used to do. And this isn't to say that they are replacing people. I don't think that's the case. But they're not bringing in new people when they can have cost efficiencies through technology.
Yeah, and if I'm going to put one little light here, because I think it's important not to be completely gloomy, it's worth noting, of course, that the 22 numbers were the exception, and if we kind of disregarded the Q2 and we just looked at it from Q1 2023, the variance between Q1 or Q2 23 even and now is nothing. It's very little. So it's not like completely bleak, but I think the most important thing for recruitment directors, business unit leaders, and owners is that with your teams, they need to forget about 2022. Forget it. It was great. It's gone. It's like that amazing summer holiday you had 10 years ago where you had the time of your life and everything that could have gone right went right. And you still try and recreate that holiday every time you go away. It's never going to happen. Well, maybe once more in your life, but just stop worrying about it. Just focus on what's next.
There's been a question here, James. So it said, if
Mm.
the trend is down, what markets do you think of some optimism or growth from?
Okay, I
So,
mean that's very interesting. Look, I mean to be fair, tech tech is very broad. The areas which are prefer, I mean the subsector which is probably one of the star performers. Well, there's 3 star performers I would point to. The first is fintech. If you didn't already see that, that's quite obvious. So fintech funding is double on what we saw last year. And so straight away, you're seeing a lot of companies in the fintech space scaling up their hiring. And that's right across the piece, right from software engineers through to sales and marketing roles. So I think that's a really good one. If you're in terms of if you don't really have entry points into fintech and it's also quite congested, it's quite crowded, I think one of the good emerging ones is around clean tech. And that's where we're starting to see some growth. We're going to feature that, I think, in one of our sessions next year. We're going to do a deep dive into clean tech. But one of the areas which is most interesting about that is because of the amount of government funding which is going to be coming through. The government are doing an initiative which is designed to incentivize Ps and VCs to actually invest into clean tech. So this is very much Ed Miliband's baby. We want to make the UK zero carbon, etc. And any company that's going to help with that is going to get a government leg up. So I think that's then the second one, which I would say is worth looking out for. And then the third, in terms of kind of skills area, which I think is also worth noting, is just generally in terms of across all industries, across all disciplines, AI and data centric roles. As we look at the increase of data which we're gathering, and as we look at how data is being used, companies are looking to utilize data and actually integrate data into their operations. And if they have rubbish data coming in, then their ability to create any kind of turnkey predictive analytics is limited. So where you're seeing, I wouldn't say like a revolutionary growth, but where you're seeing a genuine uptick, regardless of economic climate, is in terms of those kinds of AI and data roles.
Yeah, I agree. And Simon, just to kind of on a bit of a broader view there, one of the things that I think we're seeing at the moment is outside of this, pharma seems to be doing well, marketing seems to be doing well. I totally agree with James in the clean energy space. I think we're going to see a lot of growth there. But obviously, a lot of this growth comes from you get out what you put in. One of the things, we did a survey recently, and we went out to market and we were asking them, what are your top priorities around growth? And as you'd imagine, exactly what they'd expect to say in those places, which is winning new clients and those kind of things. But what we're seeing was that a lot of brand and marketing was very, very high. Automation was very high, but also providing value add services. So what I think we're seeing is it's not just is my particular industry going to see growth, but individual agencies in there adding value to see growth maybe that is not in line with their market. I think we're going to start to see a few superstar agencies coming through where they are very forward thinking. But yeah, for me, it's clean energy, pharma, and marketing at the moment. But thanks for the question, Simon.
Yeah. All right, I'm going to move on. Okay. Right now, this is quite a lot on this sheet. So, Matt, by the way, we're going to need to speed up a little bit because you and I are so chatty. We're 20 minutes in and we're only on slide 10. So we're going to be super tight so we can keep it to half an hour in your lunch hour. So look, what am I showing here? I'm showing IT vacancies across the private sector. So that's not just tech companies, that's all companies in the private sector. And we've done a breakdown by region. And just importantly, we've done the breakdown annualized year to date, but also showing November as well. And what this then shows us is how is IT recruitment shifting by region. And what we can see therefore is which the regions which are outperforming the others, which the regions which are struggling. Now, interestingly, because I might even need to update this one to reflect Scotland for next time. So if you're Scottish, be happy. I can tell you that Scotland is actually doing quite well at the moment. But actually, if you're looking at the general regions across England, they're actually contracting in terms of the UK overall. But London in particular this month has had a good month. There's been a good uptick in London, and you can see that reflected in the national in terms of the last 2 years, where it's been averaging 44% of jobs and 43.8. November's been 46%. So that's a good sign. Same with the Midlands has seen a small uptick. It's beating the annual average. I mean, Matt, do you want to throw in a last word on this one before we move on?
Yeah, just that Wales isn't on there. Being a
hey, I'll put Wales on next time. I'll put Wales. I promise. I promise. Since you're, as your position as a, since you're here, I should have done that. Sorry, Matt.
That's fine. No, but yeah, I completely agree, James. And I think that the London uptick was to be expected. To be honest, I think it's where we see a lot of these roles focused. One of the interesting kind of figures there for me was the North and the Midlands. Traditionally very, very heavy in the industrial side, but it's great to see growth across the regions. But I'm totally what I'd expect to see.
Yeah, and one last thing before I forget, and before we go on to the next slide, if you are in the North, look out for Atom Valley. I think that as Atom Valley goes live, the job flow in the North is going to surge. Google it, Atom Valley. You heard it here. Okay, I'm moving on. So, skills demand. Just to explain this table, what have we done? we've taken the various functions that sit within IT in broad categories, from development engineering through to IT management, covering product, project management and change, then infrastructure support. And in the same way, what we're looking at is what's the job flow been for this year? How does that then break down a percentage? And in terms of November, this past month, how is that then comparing? And so what we can see straight away is that where the biggest burst has been in infrastructure. So that's something which is to be aware of. But development is broadly holding, IT management broadly holding this year. Overall, in terms of the year to year, it's not showing here, but in terms of the year to year, what we've seen is that there has been an uptick in development this year compared to last. Security as well is picking up in the last month. It's also interesting. Could be linked to the geopolitical uncertainty happening. Who knows? Matt, any final words?
We have got another question, but yeah, again, one of the interesting things I find here is that IT security being lower on that list, as I think it's become more and more prevalent. But I'd also expect IT management to be lower. So it's interesting here to see that actually there's actually a really good spread. I am seeing a downturn in the telecom space. We're seeing a lot more suppliers, but that the industry overall is actually not, I wouldn't say struggling, but finding it hard at the moment. One of the questions that was asked, with these jobs, are you looking at remote working so the regions are less important?
Going back to that, well, the truth is that what we're seeing generally is that more and more companies are requiring people to be, for want of a better phrase, assigned to an office, even if they don't work there full time, where they're expected to make that their anchor office, and that's how job listings are being described. You'll be reporting into so and so from the such and such office, and you'll be required to come in X amount of time, and that's often a function of interview.
Agreed. Okay. Thanks. Well, let's skip on and see if people got loads.
Yeah, exactly. So anyway, now this is going into a deep dive of the roles. And so we mentioned it earlier, which areas are growing. Data analysis is the one that stands out to me straight away, because in terms of just individual role analysis, skills and demand, this is now the third largest area, which is significant. This was not always the case, guys. I've had this company for 18 years. You would not see data analysts as top 3 skill and demand 18 years ago. I guarantee you that. And it's been really gradual. It's been really subtle. It's been really slow, but it's growing and growing and growing. So I would be saying to any IT recruiter, if you're an all-purpose IT recruiter, that'd be the thing which I'd be looking out for as an area to invest into.
Yeah, I think, with more businesses being data-driven and using data analytics to power their businesses, this totally rings true. The interesting thing for me on there is also the PM side of it. As people are implementing more, they're doing more and more projects. Interesting to see that IT consulting is a bit lower than I'd expect it to be, but still all very interesting.
Remember, that's only they have to be working in the consulting firms in order for even that category to populate that category. So, that's like your Accenture consultants or your EY consultants and things like that. So it's not like whereas you get a lot of, if I can say this, Matt, you and I both know this, you get guys who are working in, SaaS or whatever, the job title consultant, but actually salespeople.
Yes, absolutely. You see lots of those.
Okay. All right, I'm going to skip because we're tight on the time. This is the sectoral breakdowns. Now, the key point to make here is, why is IT so far down in last year? Retail. That's the one word. Retail. Why is retail taking a hammering? Government policy. That's a start. Let's just start with that. I don't like being too political, but if we look at the government policies that have been put in place, ever since the election was announced and the Labour Party's political platform was put out there, it became clear that for the retailers who predominantly offer on the basis of low wage economy and who predominantly operate on the basis of low margins, the combination of NICs increases and everything else has caused a real problem for them. And that's why they put the retailing consortium and put in a letter of complaint complaint into the government about the budget, and it's manifesting in terms of the job flow. Because if you look at the other industries, it's broadly okay. It's not too bad. Okay, banking is going to be slightly down. Insurance might be about the same. Professional services a little bit up. The tech sector is going to be 10% up. The other areas okay, but retail is taking a real hit. And so what that means is that, whether that's your Marks and Spencers, whether that's all the others, this is the area that's really under pressure. So if you've got guys who are on those desks and they're struggling, you might want to think about whether it's possible to even repivot them, because there's honestly, implementation hasn't even happened yet. It happens in April. And I don't see that getting better next year. I mean, Matt, am I being bleak? Am I being harsh? What do you think?
No, I think you're being quite fair. There's, especially in the short-term effects of this, I think you're exactly spot on. I think is the juice worth the squeeze? If you've got those people who are on those desks, I think now is the time to see about where else they could add value, and that might only be a short term before you see an uptick. You can always flip back to this, but I think retail's in for a bleak time. We see it, day in day out. The high street is slowly dying. This is never going to be a sector that we're going to see the boom like we have in the past. So we'll see seasonality, as we always have to around Christmas. But yeah, I think it's going to take it's going to be a real tough time for retail.
Blitzing through. Only 2 slides left, guys, so thank you for holding on. What I've done here is, look, the metaphor I like to give with this one is, if you imagine the Standard & Poor's 500 and you imagine it's a tracker and it's analyzing all these companies, and year on year it goes up 5%, 6%, 7%. Now, the truth is that the people who make the most money, they're not just doing a tracker, they're identifying which companies to invest in and backing those, and that's how they get their 100% growth, right? And the truth, too many recruiters do recruitment and their BD like a tracker. They just apply an equal amount of effort across the market, and then they see which ones respond, etc., etc. So what we've got here is we've got analysis which is showing, for example, what I've done here is this year, if you were doing development recruitment, which company's got the biggest emphasis on development right now? So you're an IT, okay, you specialize in development, engineering, and we'd say, right, okay, IBM, 35%, and this is just the multinationals, this is the largest companies, but go win some whales, 35% of their IT vacancies development, Arm, 33.7%, Apple, 30%, Facebook, 93%. And so focus less on the job volume and focus more on market entry. How do you enter? How do you strategically pitch? Matt, I know you're a data geek. What do you think about this as a way to pitch as a recruiter?
Oh, this is exactly where I'd be coming from. It's whenever I say I've been a recruiter, I'm a recruiter in recovery. One of the things I would say is that you don't spend your time convincing people with opinion, right? You say, these are the facts of what's going on. This is the change in your market, the change in your customers. And informing people what's going on in their market is huge. It doesn't just add value, it adds credibility. And so, yeah, this is where I'd be spending my time and saying, look, which of those have had the biggest change? What's changes are going on in your market? Where do I spend my time? Especially as a recruiter, I want to be spending my time with those who've got the biggest growth. And then I want to be using data to evidence that to them about what's growing in their market and why. Even though when it comes down to things like, these are the salary changes we're seeing, or these are the regions that we're seeing, that adds value.
And we're going to go to, I think it's the last slide, and I promised a little bit of a gaming focus. And this is just to drill in, and this is basically top 10 gaming companies in terms of their job flows this year. And then we're seeing which ones right now are surging. And the key is there, keywords studio. So to explain what this report is showing is that if you take the first column, which shows 94, that's all their IT vacancies between January to November this year. The November column is showing just the November vacancies. So if you take 1/11, i.e. November versus the year, what that means is that anything which is over 11%, I think, 11% is beating their annual average. So in terms of keywords, their November job flow was 50% up on their annual average. Why does that help? Well, because if you want to go and do an outreach into their internal talent team, for example, that's the moment where they're going like, actually, we do have a lot of jobs on at the moment. We don't think we can fill them all ourselves. We don't think we can source them all. Actually, we don't have terms with you, but if you can help us, we're happy to talk. I mean, Matt, how often does that happen with recruiters?
Not often at all. And it should be. They need to remember that actually they're in sales, and you need to approach it very much like a sales position. You need to be looking at those who've got the biggest growth have got the biggest problem, and that's where you add value. You don't want to be spending time with those who go, actually, our internal team are, underperforming. They're doing fine at the moment. They've got enough jobs on. Those who are really struggling with loads of jobs are those that you can add value. And again, you want to spend your time in the most profitable places. So this just goes back to that: take a data-driven approach, see what's in front of you, and work your best angles.
Yeah, yeah. And look, so key takeaways. We're past time, but thank you for hanging around, guys. Budget's casting a shadow. We do think you'll see a rise in interim, and that might be another area which you can push into, especially with the next increases. So if you've got temp desks, there might be it might play a case of expanding those. I think 25 is going to be volatile. The UK is in a weird position, but it still is very reliant on EU in terms of its economy. And there's a very good chance that Trump's tariffs are going to trip an EU-wide recession. Corporate recruiter track. I mean, I think, to be fair, it'll pick up in January. I think this is just an aftermath of the budget. But, let's see where it goes. Technology sector's picked up, but media, retail in decline. Software engineering is the largest area, but service delivery management, I think, along with data, is areas to watch. London's outperforming the rest of the country. Once again, that can change, but Scotland, I should say, if you're Scottish, you can jump up and down. And next time I'll have Wales. And finally, my final observation would be: look for the areas which the government is going to support. Look for the areas the government's going to sponsor. The biggest growth next year is going to be in government-backed areas, be that housing, be that Great British Energy, be that infrastructure. Those are going to be the areas which you can ride the coattails on. All right, so I'll go back to this and just say, look, guys, if you're here, thank you very much for attending. If you'd like to know more, do sign up for our weekly newsletter. The link's there. We should probably get a QR code on this for future. And we publish all these kind of insights on a weekly basis, publish with lots of different leading industry recruiters and everything else. And Matt, do you want to have the last word?
Just say thank you, everyone, for joining us today. And thank you, James, for having me. Reach out to either me or James on LinkedIn if you've got anything you want to discuss around this. We love to chat this stuff through. We're both big advocates of the industry. But if there's anything you disagree with, agree with, or whatever else, reach out to us on LinkedIn. We'd love to chat to you.
Lovely. All right. Well, thank you very much, everyone, for staying on. I appreciate we ran over slightly on what we wanted to do, but I hope you guys found it interesting and useful.
Thanks for joining, everyone.
Thank you. Bye-bye.